I might just run through two more quick questions. Guess back to that whole thematic about when to invest and what's going on in the marketplaces. We've just seen Warren Buffett sell up a whole lot of his Apple stock and go to cash, quite a big pile of cash, actually. What are your thoughts on that? Should we be betting against Buffett?
Yeah, so actually, Buffett is pretty much reaffirming everything that I said today. So what he's saying to you, Buffett, is that the large mega caps are expensive. And, he's selling those. He's not trying to time the market. He's just, he cannot buy the companies that we invest in. He cannot buy the small companies. So he's basically, obviously taking profits in what are very expensive, Apple Mag 7 stock. So, I don't see it as a signal. Historically, Buffett is actually not a good market indicator. He's a great investor, but he's actually not a good market timer at all. In fact, he was heavily in cash during March, April of 2020, and he pretty much didn't buy anything. In fact, he sold his airline stocks, which was probably the worst possible times to sell. So I'm not knocking Buffett. He's the greatest investor of all time. I guess what I'm trying to say is that he's not necessarily a good market timer. He's just a great sort of investor in companies. And I think he's just reaffirming what I've said, is that the large cap stocks, which have drove this incredible rally over the last year or two, are fully priced. And now the rest of the market, the small and mid caps, will carry the market over the next few years. And I think that's where we are going to benefit. And as I showed to you over the 100-year chart, bull markets last 5 to 10 years, bear markets come every 5 to 10 years, and they last for a very short period of time. We've had one in 2022. It's almost never been seen in the last 100 years to have a bear market so soon after a bear market. It just doesn't happen. So to me, together with lower interest rates, lower inflation, a new Trump administration, and obviously we've got this AI tech revolution that's going to drive a lot of innovation and growth. I think we're in for a very good few years. Now, I want to mention one thing, is that the one thing to keep in mind, it's very common to have pullbacks in the market. So even during a bull market, in fact, you should have on average 3 pullbacks every year between 5 and 15%, and you're still in a bull market. This year, we actually only had one, which was if you remember, in early August. The whole world was coming to an end because of the yen carry trade unwind. And for a week there, the market pulled back by 10%. And I'm pretty sure that everyone forgot about that today. So these pullbacks happen. They always happen for a reason, but they're just part of a long-term bull market. And so expect those. And when they happen, use them and take advantage of them to actually invest in the market. And investors over the last 5 to 6 years that have actually took advantage of these drawdowns and invested more in our funds when we were down have actually done a lot better than the 17% per annum.